Good morning, everyone, and welcome back to day 2 of the IFX Expo International. I'm very glad to see all of you back, still standing, still caffeinated. I'm Despina, and yes, you're still stuck with me. We're starting today with a sharp look at the changes shaking up online trading, shifts in business models, user behavior, and market pressures that are keeping many on their toes. Moderating the first session is Mohammad Isbeer, Chief Institutional Officer at Equiti Capital. Let's kick things off. Please give them a warm welcome.
Thank you so much, everyone. So as Despina said, my name is Mohammad Isbeer. I'm the Chief Institutional Officer at Equiti. We are a multi-asset broker that have 7 licensed brokers globally. And we do a lot of B2B and retail business. Today, we're going to start with focusing on online trading and the new challenges that's happening in the industry, from regulatory changes, ESG integrations, and client trust. Before we start, I would like to give a couple of minutes for my fellow panelists to introduce themselves and respective companies, please.
Thank you, Mohammed. Hi, everyone. Thank you for joining us this early in the morning. We appreciate it. So I work for B2 Prime. I've actually only been there at the company for, I'm going to hit 3 months. So it's a brokering company. I predominantly come from an investment banking background. So I worked in institutions such as State Street, where I was for 7 years. Prior to that, I was at Deutsche Bank for 5 years. And prior to that, I was at Barclays for 2 years. So I decided I got bored with investment banking, and I decided to join the fintech brokering space. It's been a steep learning curve. It's been a bit of a culture shock, but it's been very enjoyable thus far for the 2.5 months. A lot to learn, but I'm really happy I took the next step, the change in my career.
Morning, Jason from IC Markets. Again, a bit like Fernando, only been with IC for 3 months now. Spent 20 years or more in the online broking space, predominantly retail-focused companies. Prior to IC, I worked for a couple of different brokers, global brokers getting their licensed entities established in the Abu Dhabi global market financial free zone in the UAE. With IC, I've joined to look at what we can do in the license space within the UAE. So again, going through a regulatory licensing approval process as we speak.
That's good, because we're going to be focusing a lot on regulation today. As you guys see, I mean, it's a very small, cozy panel, but we have a wealth of experience from the industry and from the banking sector, which will also add a lot of value, especially on the topics that we are about to venture into today, like ESG and these topics that I think have been heavily adopted by the banking sector before they actually started to be introduced in our industry. But I want to start with the most obvious question. We said we're going to focus on regulation, the changes and the tightening. We're going to focus on ESG integration, and we're going to focus on client trust in the digital age. These are the 3 main aspects that we think that our industry is facing now. And the question is the contrast between, are we stifling innovation, or are we paving the way into a stable and more stable environment for growth and scalability? And I will start with regulations. Ever since MiFID II, and then after that, all regulations globally are starting to tighten up. Mm-hmm. That's the biggest question that we have. Is this stifling innovation? Is it stifling growth for the online FX and CFDs industry? Or is it actually paving the way for more scalability and stability? And maybe it's a short pain for a couple of years, and then we're going to see the impact of it. Mm-hmm. I don't know if maybe Jason, you want to start? I see it like here.
Yeah, look, so having worked at a few different places that have global footprints, the models have often been to look at getting appropriate regulation in different locations so that you can service your global client base. So it's a mix of selecting jurisdictions that have the right balance between client protection and also an ability to still conduct business. We last 8 years I've been based in the UAE, and you've seen a lot of regulatory change happen there, be it in our space or even into the crypto space, with the UAE being one of the main sort of digital adopters when it comes to regulation, through ADGM, through VARA, through a few different licensing regimes. Perhaps with that actually comes a bit of confusion and complexity even from a business level, because you've got a small country like the UAE that has so many different options when it comes to regulation and subtle nuances in how they interact with both the businesses but also enforcement of rules and into the banking system, etc. So I think selecting the right jurisdictions that have that balance between permitting you to do business but offering a good level of client protection is key. And in a global business, having a few different options and giving clients the choice, allowing clients to choose potentially where they would like their account to be held with clear understanding of what the difference is, can be a good thing.
Yeah. I mean, maybe continuing in the same path, Fernando, I think we're trying to maybe kind of find the soft spot or the right equilibrium between. Is this, I mean, you came from the bank industry, so your experience held. That regulation, that tightening has happened maybe years ago.
Yeah.
And would you see, and definitely kind of led to more growth and more stability. Would you say this is happening in our industry?
Yeah, absolutely, I would say so, because coming from the banking industry, and myself being based in Asia Pac, my experience was that we would have jurisdiction for Asia Pac. I'm based in Australia, so we would have ASIC jurisdiction. We looked after clients in Singapore, the Singapore Exchange, Singapore regulators, etc. Coming into a broker like B2 Prime, when you have multiple asset classes and you have multiple jurisdiction, it does create a strain, right? However, what I've realized from B2 Prime is that it creates opportunity. It creates, if you do it right, as we do, from what I see with our compliance and legal team, clients, not only clients, but regulators, you can build a relationship with them. They can see that you're established, we've been around for 10 plus years, and they see that we can create a long-lasting relationship, sustainability, scalability, and it's just, for us, it's an opportunity. It's not like a risk.
Okay. I understand, which maybe leads me to my next question kind of naturally, which is regulation arbitrage. And this is, with all kind of this tightening in regulation, a lot of brokers, and I wouldn't say a lot of brokers, but I think all of the brokers have adopted maybe a main flag license or regulated entity plus some offshore entities. That's the regulation arbitrage. Is that still a good solution? Is it a long-term solution? Is it going to be more tightening, and then we're going to see that kind of fade away? Is that where you think the industry is going? And how are clients reacting to this? How are they seeing? I used to have my accounts in a SISIC or an FCA regulated entity. Now my account is being held in a Mauritius or a Seychelles entity. How clients are reacting to this maybe issue?
I think clients are becoming more savvy, right? I think it's going to get more tightening as we go along. But this is where, there's a lot of brokers out there. A lot of startup brokers. If you're a client and you go on the website, you can see many brokers that you can do business with. But I think because of this, people have to become smarter. They have to actually identify who are the brokers that are like established, that are mature, have been around for a long time. So I think it's going to differentiate, the less mature brokers from the more established brokers. So in a way, it's actually, it can be daunting, but also for established brokers, again, what I was saying before, it's an opportunity to differentiate yourself from the rest.
Right.
I think it's an education, coming back to the sort of savviness, it's an education piece as well. And, going back to the complexities of regulated regimes, and I can use the UAE as an example. There's two types of licenses that people go for when they're looking to be regulated onshore. Now, to a end retail client, do they understand the difference between a Cat 1 and a Cat 5 license? Probably not.
Yeah.
Speaking to people within the industry, they probably understand the difference, that one entails a large amount of regulated capital to be held, the other one, zero technically at the moment, and it's more of an introductory license perhaps to some of the other jurisdictions that you mentioned before. But you've also then seen in other jurisdictions, the likes of the UK regulator, looking at the substance of the brokerages that get set up there, and are they actually conducting business to UK clients and within the UK, or is it one of those flagship sort of regulatory badges that they want for credibility, but actually nothing is going through that entity? So the regulators are getting more savvy, as are the clients, to the structures that get put in place. I come back to saying it should be choice, by giving the right information, putting out the differences in a clear manner about the different jurisdictions and what those regulatory protections are, and the client's able to choose, that makes sense, right? Doesn't mean we'll end up there, because we know everyone regulates in a subtly different way.
Yeah, I completely agree. And before I move away from the regulatory kind of topic, it's something that I kind of see also myself, because we have 7 regulated entities between, FCA, ESCA, CISEC, so these are the heavily regulated ones, and then going into the Seychelles and the Jordan and all of that. The cost of compliance is becoming extremely high, and that's putting a lot of pressures on our operations, on our profitability, and I see that across all the industry. We see also some improvement in RegTech, which helps a little bit to kind of reduce that cost, but also adding some complexity into our operations. How do you guys read that? I mean, is cost going to exponentially keep growing, or?
I think 2 decades ago, when I first started, all the focus was on the trading tech, the client-facing GUIs, the risk management and order management pricing on the back end. And over time, you've seen, as you say, a sort of development where more of the business is becoming more technology-focused, whether it's from a system base, whether it's adoption of AI. We've got to, nowadays, any panel you're in, you have to mention AI, otherwise you're not relevant. So you'll
Thank
see
you for mentioning it, by the way.
Yes.
I thought I was irrelevant for a while.
But you're seeing that sort of flow through into all the sort of work processes, whether it's client-facing and support through adoption of more intelligent chatbots, or in the compliance space with quicker and better solutions for automation when it comes to onboarding or transaction monitoring, etc. So there's that element there, and I think that will just keep going. We're in the fintech space, right? So adoption of either partnering with better solutions or developing it yourself, whichever way you go on that. For me, the other thing that is likely when we come back to regulatory burdens is how the regulators engage with business, because in some jurisdictions you see that there's more of an approach of regulation by enforcement, and in others you see regulation by engagement. And I think as you've got that global footprint, you're more likely to remove and come back, or go away from, the places where you're facing regulation by enforcement. You're going to set up less of your global operation there and look to the ones who are going to be engaged with you and want to partner with you to develop an ecosystem. I mean, we're in Cyprus now, and that's what has developed across this island. Has been a partnership between the FX and CFD brokers and the regulator, and that's why so many firms have set up there over the last 20 years.
Any additions on the cost of regulation?
Yeah, so I was doing a bit of research, AI research, to prepare for this, and I actually looked up, and it said that compliance costs now for brokers are getting to approximately 15 to 25% of operational cost.
Yeah.
Right? So, yeah, compliance cost is real, right? But, and as well, if you don't invest in compliance to at least a minimal standard, you're going to have risk, right? With compliance, if you take time to onboard a client, you could lose that client, right? And we suffer this in the broking world, but we also suffer this in the banking world, right? The compliance teams, if you don't have a stringent compliance team, then it could take time. There could be delays, and clients are very impatient nowadays. So it is a risk. However, as well, if we talk about RegTech, right?
Yeah.
It's definitely something that's happening, right? But from what I saw and what I've seen now over the last 2.5 months, clients should definitely invest in RegTech. But doing the research, I saw that if you're going to do RegTech, you've got to basically do it at full capacity, where you fully integrate into a client's UX, because that will avoid complexities in the future.
Yeah, fully agree. And that also leads us kind of nicely into the second hurdle that we see for the growth of the online industry now. An industry that used to be heavily reliant on client interaction. Trust was the main thing. That's the whole purpose of why companies maybe 10 years ago would go for regulation, is because they want to create that client trust. And then there was opening offices and talking and sales efforts and all of that. The industry now is moving into a fully online kind of structure, which begs the question, how do you get clients' trust? How do you still have that same added value? Is it the brand awareness? Is it kind of the tech that you integrate? Is it the ease of use? We'll go into a bit more detail, but maybe from a general idea, if you guys can give us, how do you see this client trust in the digital age? How is that evolving?
I think it's all of the above that you mentioned, right? It's brand awareness. It's the period of time that you have been in the industry. There's a lot of brokers out there that have been in the industry like for 1 or 2 years only. They offer the world, they offer all the bells and whistles, but then once they sell and they bring the client on board, they don't deliver half of what they promise, right? I think it's also going back to being a mature, long-standing broker. It comes down to stability, transparency, product knowledge, and it also comes down to education. So when you're a mature broker, you have the time over the years to build all those things, right? But what I've noticed over the last couple of years is that clients now want to be educated. They want to not just on how the trading platform works, how the back end works, but they want to be educated on the regulation. They want to be educated on everything. So brokers, established brokers, need to have, be it an account manager or be it a compliance team, that have the offering to educate clients. And it's a package of all those things.
I mean, it's true, but what we see as well is, there's a lot of investment in UI, UX platforms and kind of the technologies that goes along with that. That being said, if you get your UI, UX right, you will be able to attract a lot of clients because of the seamless journey and all of that.
True.
But that, like you said, you can be saying all of these things and you get the client through the door, but eventually the broker might end up changing all the terms or how do you read this? I mean, you can have a broker that has got this right and has managed to kind of acquire a very decent book of business, but the reality of it is different, or what clients are facing is different. Is there a balance between technology and regulation, technology and trust, maybe?
Yeah, look, you're right that everything sort of comes as a package, right? And the UI, UX part of it, and it's all parts of that journey as well, right? It's not just the UI, UX of the trading platform, it's the onboarding journey, it's then the money in, money out journey, because, it's great to have a trading platform that executes, but if it takes 2 weeks to get your funds back, you start to erode trust there. You mentioned before about the sort of different structures of teams, and maybe before it was more client-facing focus. I think that still is the case. Even if it's an automated experience, you need to make it a successful one, a good one. I don't think, having worked before the UAE and Singapore, when I was there, I was told, the Asian business is all about face-to-face interactions, building trust together. Then I come to the UAE and I'm told, the Middle East business is about face-to-face interactions, about building trust. And each region thought that was unique to their own, part of the world. But I think it's still important, even today, with all that automation, that at times that face-to-face interaction at the right time, or that human intervention at the right time. Outside of our industry, I had an issue with an iPad sort of product that I bought, and I went to their customer support. The connection dropped off. The next agent picked it up, but could see immediately what I'd been talking to the previous agent about, and seamlessly picked up the conversation. Now that was a good client experience, and so it's about generating those opportunities to make sure that the client doesn't have to start from the beginning again. That your CRM is integrated to your chatbot, that it's integrated to your human chat, and it works together in a seamless manner.
Yeah, but don't you think? I get the same thing. You go to Asia, they tell you and human interaction is important. You go to Latin America, they say the same.
Yeah.
At least maybe Europe doesn't. Maybe
Europe's different. Yeah,
it's a bit different. But don't you see, despite all of this and what people actually feel, when you look at the actual numbers, the kind of the up and coming companies in the industry are the ones that have removed that kind of process of human interaction and went for scalability and online funnels and seamless kind of client journey and reduce the interaction.
For sure, but those ones then start to look at the human interaction, maybe at their high-end clients, and think that's where we should do more, and they add it back in. And those that came from a sort of initially maybe higher touch service to a smaller group of clients look at how they can evolve to scale their business up to get to more, but then understand that they need more automation and better systems. So wherever you start, you end up on the same journey.
It's probably because the newer brokers, they probably don't have the capital, right, to have the feet on the ground in their local region to be able to build that human interaction. Look, I come from Australia, right? I covered Australia, New Zealand clients, I covered Asia Pacific clients. The human interaction is key. They, especially Australians, they want to pick up the phone and they want to call the old school way, pick up the phone. They want to call the Australian number. They don't want to speak to someone, even in Asia Pac, right? So I've seen cyclical changes in Australia and New Zealand, we can't forget New Zealand, where the brokers, and not just the brokers, but the banks, the financial institutions, they come and go from Australia, but now they're coming back because they realise that the human interaction, we are in an electronic age, everything's done through Telegram or WhatsApp or whatever, at the old Bloomberg channel, but the human interaction, especially in today's world where there's a lot of, if I can say for lack of a better word, bad brokers, bad financial institutions, they want to know the people. They want to see a face. They want to see a human being, and they want to build trust with you. So for me, for my region, it's important.
Fernando said something interesting there. They want to call an Aussie number, right?
Correct.
In the last place I worked, we were having issues updating our global phone system to integrate a UAE number into it. So we had teams in the UAE that were appearing to be calling from UK or Europe or wherever, it doesn't really matter. And the feedback constantly was that the client didn't want to pick up the phone because there was no trust, because it was an overseas number. Then it becomes, where are you based? I thought I was dealing with a UAE company in instance, and you're like, we're here. Well, then why is your number this? So it's sometimes those very subtle things. So you can get the right structure, you think, across the business, but a small technical deficiency or deficiency with your partner leads to that erosion of trust.
Yeah.
Makes sense. Right, let's move on. We don't have much time. 6 minutes left for us. So let's go into a bit into the ESG and what does that mean for business? The ESG integration I think the biggest question is, do you actually think it's an actual business strategy, or is it just a marketing and a hygiene factor to adopt? I mean,
I was hoping we would run out of time before you
Yeah,
got to this question,
me
because
too.
generally at the
Me
moment
too.
it's not necessarily a massive focus across a lot of our businesses, I feel, and so it is more of a marketing tool or positioning. I think with some of the jurisdictions that we operate in, it's becoming more important, and it's something that a lot of us will have to pay more attention to as we sort of develop our business strategies and approach. But you know, I'm not going to name any names, but I see certain players in the industry that will put out that sort of ESG message as a group, but then you see their high net worth teams taking people helicopter rides and ice lake car driving or something. You know, it's that doesn't feel very ESG centric from a business approach.
what you put out for the marketing kind of channels, and then what you do internally in the company are two different things. Which is
But then you still put it out externally because you're posting the pictures on socials so that everyone sees what you're doing with your high-end clients. So there's quite an obvious contrast there.
What do you think, Fernando? I mean, between also banking and
Well,
CFDs,
this is the thing, right? So, like yourself, I haven't really dealt with ESG yet. We all know what ESG is. From what I saw, like if I can talk about my previous bank, State Street, you know, they took ESG very seriously, right? I think we've moved away from ESG being a buzzword into actually an operational, you know, discipline. If I look at the brokering world, from what I see thus far, and it's the same in the past, you know, people want transparency. People want, you know, they want to know, you know, they do ask, you know, where you know, who are the liquidity providers? You know, are they efficient? Are they compliant? Are they this? Are they that? So, look, in the banking world, ESG is definitely at the forefront now. It's actually a great selling point. There is, in the main banks, there is specific ESG teams. But I think, and correct me if I'm wrong, but in the broken world, it's still something that's evolving.
It's probably sort of 5 or 10 years behind the banking space.
Yeah.
But even the banking space, I know people who work for large retail banks in the UK who have a zero carbon target for the business. But when dealing with the vendors that support their business, they're unable to implement the same requirements into those vendor contracts, and the business is not prepared to adopt those changes in contracts to their vendors, which means if you're supporting businesses and partners are not going to be delivering what is your proposed approach, how do you deliver it? You know, it's tricky.
It's true, but I think we're focusing a lot on the kind of the E of the SG, right? But for example, the G, the governance, I feel it's becoming a bit more kind of needed in the industry, because
So is the social, though. So is the social.
social as well. But I think like like environmental and social pretty much marketing place at the moment in the industry. But governance might start to take shape.
True.
Where you see a lot of brokers have started to create committees and
I think the governance side of the business is something that comes with scale, and is probably a lot of businesses are probably further along that journey than the E and the S, and that's because we've got regulated businesses. We're seeing more brokers list, which also gives governance structure when you become a publicly listed company. So there's the elements there, particularly as businesses grow and become multinational and have a certain scale, that needs that kind of structure in place, and also from that listing sort of environment.
So maybe more focus on governance at the time.
Yeah.
It's more of a serious thing to be taken. The rest are like hygienic factors.
Yeah. On the governance side, ask me this question about 2 years when I get more into the broking space to see where it takes us.
Yeah.
Right.
Look, having jumped around a few different brokers in my career, I've been on different journeys with them, seen different levels of maturity when it comes to governance, but most have always wanted better structures and better governance to ensure that you're meeting your regulatory obligations, not in just one jurisdiction because you've got one good team, but the global
Across multiple
group.
jurisdictions,
And most view it as from a reputational risk standpoint, something you need to get right, because that will erode client confidence quicker than almost any of the other issues you may face.
Okay, that's it. We've run out of time. I wanted to kind of leave 2 minutes, but I think we ran out of time for today. I want to first of all, thank my fellow panelists. Fernando, welcome to the industry.
Thank you very much. I'm happy to be here.
Great to have you on board. Thank you, everyone.
Thank you.
Take care.